Hey traders, this is Blake Morrow with Trader Summit, and I have Mr. Richard Matthews with me today. Good to see you, and I hope you're staying cool there. I think about you guys. I mean, you got a sweater on. I mean, come
Yeah,
on.
I've got a fleece on.
You harass me for wearing like a, not you, but a lot of people over there on the other side of the pond harass me for wearing a polo. But look, it's like 115 degrees here, and it's been that way for like a month. So you're lucky I'm actually wearing any shirt at all at this moment. But good to
Don't
see
stand
you.
up. Don't stand up.
No, you don't want to see what's going on down there. But I did want to say that it's good to see you. I hope you all are staying cooler there. I know you happen to be in the countryside a little bit, so
Yeah,
maybe it's not so hot.
it ain't hot over here at all. It's
Mm.
really, I have got a fleece on. It's cold over here, and it seems like maybe it's to do with Brexit. It's a good thing that we did. We left all the heat behind. It's on the continent, and
Maybe
it seems
maybe it's
it's
that
cold over.
maybe it's that cooling disinflationary pressures you're feeling just giving you a
Yeah,
little breeze, right?
yeah, exactly.
Well,
Yes,
let's talk a little bit about, well, let's not go into the sterling just yet. I know you probably have some things to say about this pullback and the move that we're
yeah.
seeing below 130 today, but let's start off and talk a little bit about, just kind of inflationary pressures around the globe. And it seems like that, we're seeing disinflation. We did have a higher an uptick in New Zealand overnight, but in the UK, inflation's come down a little bit. Obviously, in the US last week, we're seeing inflation come in below expectations. So, what are your thoughts here as far as where we're at globally, inflation?
Uh, I've got one major thought. Is it disinflation, disflation, or is inflation just slowing? I think it's actually just slowing down a bit.
Well, that would be disinflation, right?
Yeah.
Because that I think.
So from cold England, looking at someone hot in Arizona, which made the Phoenix made the 6 o'clock news last night for being so hot and some ridiculous temperature at midnight, which I just can't believe.
It's
Uh,
ridiculous here, yes.
yeah, I think that it's a. And I was talking to a good friend of mine in Chicago, but I was actually in Las Vegas last night about this. I think that the weather events going on in the States are really quite odd, really unusual. You've got real bad storms, you've got hot weather, you've got lots of rain, you've got these wildfires, forest fires up in Canada. I think all of this must affect commodity prices, and I'm not an agricultural trader, but I'm told that wheat went limit up twice today, and I think that this would be inflationary, and I don't think people are looking at this yet. Secondly, another point on this is that and I'm not a biologist, that the smoke from the wildfires up in Canada is going to affect photosynthesis, so crops aren't going to grow so well, so you're going to get a really miserable crop in the US this year. You've got Russia blocking grain exports from the Ukraine. I think it's 4 million metric tons that they're blocking out of there. But that's not going to help. And obviously, the hot weather in Europe's also harming crops. For example, my favorite treat, olive oil, is up 27% this year. It's an extraordinary amount. And I don't think markets are looking at this yet. And I think that you are, and this is not an original thought of mine, this is an original thought of the guys chatting with Tony last night, that you are going to see more and more of these weird and wondrous weather events happening. Now, whether it's climate change or whether it's just sunspots moving or whatever, but it seems that we are having a series of these. So I'm starting to watch that, and I am very, very nervous that people think we're out of the woods and it's all over and we've beaten inflation. Whoopee. I don't think we have. And I don't think Jay Powell does. However, whatever he says, the market's going to take it as dovish.
Yeah, well, first of all, as far as the weather changes go, and I'm not a weatherman either, but it would be foolish to believe that the markets aren't going to be affected by this, the climate change that we're seeing, especially with as aggressive on both sides. Whether it's freezes during the winter, or it's too dry during the summer, or too wet, and kills crops, because it's too wet. I mean, whatever it is, you got to think these disruptions are going to affect food supplies and keep inflation relatively, propped up. And it's to our point, our conversation that we had last week with yourself and Michael Brown. And I know I've had this conversation a couple times with people in our community, is that we're at a point where central banks are really, you're probably going to start to struggle to get inflation from, to their target from current levels. And I think that what you're pointing out is it's not going to be really easy for the Fed or any other central bank for that matter. So the market seems to be cheering these disinflationary pressures, but the question is, will the market care about probably what we're going to be seeing in the future, as you pointed out? And the markets, they don't care until they do, right? I think you've been around long enough to understand that, you can point out all these things and say, well, this should be happening, this should be happening, this should be happening, and the markets will ignore things until they don't. Until at one point there's a tipping point, and maybe we're getting close to that.
Yeah, I just think I think there's a number of tipping points knocking around. I thought Goldman's figures today were really disappointing. And if Goldman's can't make money in the market, what hope is there for any of us?
Oh, if the squid can't. I don't know.
If the squid can't, we're all battling away here. We're all just little jellyfish. That concerns me a little bit. I think that people are starting to think that the fight is over. And I can't believe that you can have such a rapid rise in interest rates that we've had over the last 18 months or so without more damage being done to financial institutions for a start, right the way through to normal businesses. I mean, certainly over in the UK, we're seeing the biggest number of company insolvencies and closures for 15 years, and all of a sudden it's starting to hurt. And I think the market's going to this, it's summertime, everything's fine. Let's go to the beach. Let's go fishing. Let's have a good time. We'll worry about everything when we come back. And come October, they're going to go, oh my God, reality bites. The Fed ain't going to drop. Everyone thinks the next move, once the market plateaus on an interest rate, the next move is downwards. It's a different world now. They're not going to start cutting rates. We're not going to see anything unless Armageddon happens. Anything like zero again. Rates are going to stay up at 4 and 5% for a long, long time. Everyone's got to borrow money. The States has got to borrow money to service your debt. We've got to borrow money to service our debt because of COVID. And there's always going to be like a little battle going on to keep interest rates high. So I think the combination of weather, which is probably the least consideration of people, the fragility of the banking systems because of this massive rise in interest rates, and the fact that interest rates are going to stay up here for a long time. I don't see the Fed certainly even thinking about cutting probably for over a year. And I think the market's praying for it.
I was having a conversation with some people in our community about blow off tops and what the monetary environment was towards a blow off top in the markets. That maybe think back like the .com bubble, and the Fed was also raising rates into that time frame, kind of like they are right now. The Fed and other central banks as well. So will it be enough to elicit a response, a negative response in rates? And I have to agree with you. This is not your grandpa's market. This is not this is not your father's market or your mother's market, because central bankers have been and participants have been kind of taught to believe that during a crisis you can have rates come down, but when you're in an inflationary environment, which we haven't seen since the 70s and 80s, right? I mean, things might be a little different this time, and people always say things might be a little different, but things might actually be a little different this time, right?
I think so. You've got to be in your 40s to have seen interest rates like this before. You've had 15 plus years, as a trader, you've had 15 plus years of nigh on zero interest rates. People haven't seen this.
Yeah.
but they just don't understand it. And this, you're only getting interest rates back to the normal levels. That's the incredible thing to me. So I think that, you know, you could suddenly, people just suddenly wake up and go, oh, shoot, you know, I don't like this.
Well, you know, what else is I think interesting, Richard? And you're right. Anybody that's been on a trade desk for less than 15 years at this point, or in the markets, haven't seen an environment like this. Of course, one of the other things that I think is going to be really fascinating is seeing the response. Unless there is Armageddon, unless we have, you know, complete capitulation of companies, where the Fed actually has to act aggressively, you know, even if we do cut rates and we cut rates by a quarter point here and a quarter point there, how big of a difference does it really make in the grand scheme of things?
Yeah,
so
exactly.
So let me ask you this, because we could go on and talk about this for a while. Actually, I'd like to talk about the sterling, because we had UK inflation data, disinflationary pressures coming through. It looks like things are heading back to normal, and everybody in the UK is going to be able to buy a house soon. It's what it looks like, right?
Yeah, I mean, they're certainly going to drop by 30%, I guess. But, you know, grocery price inflation's only 15% now. You know, that's great, isn't it? We're really out of the woods. That's fantastic. And that probably gives the Bank of England an interesting few weeks, actually. Probably gives the Bank of England a bit of a problem. So I think a 50 basis point rise was nailed on for August. And I guess now it's probably 50-50 whether you do 25 or 50. There's a lot of political pressure on the bank, because it's become inflation and mortgage rates are the stick that the Labour Party is hitting the Conservative Party over the head with consistently. It's the government's fault. It's the government's fault that mortgage rates are up here, which is nonsense. It's the Bank of England's fault. So I think the Bank of England's got a tricky decision to make over its next hike. I think they might still do 50. I'm in the minority on that. You've also got 3 by-elections in the country this week, which the Conservatives are going to absolutely get hammered in. And that will weaken Sunak even further. You've got an election within a year, a general election within a year. Do they stick with Sunak? I don't know. There's talk that he may go. I think it's 13-1 that they get another Conservative leader before the year's out. Whether that happens or not, I don't know. But, you know, finally, the Bank of England, to me, has done the worst of all things. It's lost credibility. No one believes it. Traders don't believe it. The man in the street laughs at it. The government laughs at it. And, you know, that's a really bad thing when the central bank loses its credibility. But then, of course, they're okay. They've just awarded themselves £25 million worth of bonuses. And you just think, the governor's telling everyone, you've got to show restraint on wages, and then he publishes 25 million quid in bonuses. You just think, what are they doing? What planet are they on?
Well, I can feel from over here across the pond that we're across the pond and then some, maybe over a few mountain ranges and a few rivers. But I can feel the blood pressure already rising. That I know you were feeling pretty good about Andrew Bailey's job and how well they've done with inflation up until this point, right?
Oh yeah, I mean it's been a fantastic show, but it's it's only 4 times their target level, and they're celebrating it as a victory. It's just
so. Let me ask you this: price action wise with the sterling. All right, we it looks like we're struggling with the 130 level now. Yeah. You know, the moves above 130 we're touching levels we hadn't seen since 2021. And we backed off a little bit, but is this back off that you're seeing in the sterling, you know, as we come back to the 128s, 129s, do you reload on longs here, or do you stay in the, or do you turn bearish and look for a little deeper move lower with the sterling? What are your thoughts?
I think it was a very, very crowded trade. I think the market was very long. You know, you see the response today to the CPI figure, and everyone's all but yours got out of their positions. I was quite surprised how sharply it's come back, and I think that shows underlying weakness in it. I wouldn't be loading up on longs here. I'd be biding my time to wait. I think we've got stagflation over here. We've got political pressures. You know, I just don't feel terribly comfortable. I don't
stagflation is not a term that we like to use in the markets, but do you really feel you're in a stagflationary environment there in the UK?
Yeah.
All right.
Yeah.
So with that being said, what's your play right now? What do you think's like your best play in currencies at the moment?
I quite like the dollar. I think the sell-off got overdone. It's bounced back. I think the euro's it's going to be interesting with the euro that they started backing away from hiking rates earlier in the week, and then today you got Eurozone inflation came out higher than expected. I think Europe suffers when China suffers because much of their market is selling luxury goods to China. I mean, they don't make much else apart from Ferraris and Vuitton handbags and Hermes. Great.
Yeah, the Richemont group was down quite a bit yesterday.
Yeah,
I think down nearly 10% or so.
So I think that the euro is going to suffer. I think that we've got, as I said, as we've just been talking about, I think we've got all sorts of problems. But then again, the States keeps on rolling. To me, it's unbelievable. The industrial production wasn't that good, but then retail sales aren't that bad. And employment's still pretty healthy. And you've got to replace all those munitions that you've given or sold, I suspect, to Ukraine. So that should keep the economy buzzing, and war's always good for the economy, isn't it?
Well, let's hope we can steer clear of war. So, well, Richard, I'm glad we're back on pace to continue to meet. And guys and gals, as you're listening in, if you like what Richard has to say here, make sure you give him a big thumbs up and subscribe to the channel so you don't miss any of these fireside chats that we have with Dick and myself. Richard, thanks for being here with us, and thanks for providing insights to the Traders Summit community.
Good. You're welcome. I don't think we need a fireside. I may do. You certainly don't.
I don't need no more fire. I'll take some. I'd love to be wearing a pullover like you're wearing right at this moment. All right. Have a great one, and we'll see you next week.
Cheers. Bye now. Bye-bye.
Hey, traders. Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also, click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.